right, let's kickstart the show then. And there are a plethora of funds available in the market to invest your hard-earned money in. But how do you assess which is the right fund for your portfolio? What are the criteria that one needs to look at? To help you navigate through this maze, we have on board Nisreen Mamaji, CFP at Moneyworks Financial Services. Also, do not forget to send us your portfolio queries on our WhatsApp number 865-797-4571 or email us your queries on the Money Show at etnow.tv. Nisreen, hi, thanks so much for taking the time out and joining us on the show today. Let's get started with all the queries. I'm going to throw the first query at you. This is coming from our viewer Shweta, who's written to us over email. Now her question is, should I invest my money in multiple mutual funds or should I allocate the entire sum into just one mutual fund? What is your advice here for her?
So thank you for that. So Shweta, basically, it's very important for you to also diversify your portfolio. So there are benefits of selecting more than one mutual fund. When you invest in multiple mutual funds, it will allow your investment to grow across different asset classes, sectors, perhaps even geographical regions. And this diversification can help reduce, your overall risk in the portfolio, because if one fund underperforms, others will still provide returns. So you will still get an average, pretty decent return. Also, if we select various funds for you, we can customize the portfolio according to your specific risk tolerance, and we'll select funds according to different investment styles, whether it is growth, value, large cap, small cap, or even international funds. Also, by selecting different fund managers or various asset management companies, you can also take the benefit of, risk management. So that way, even with, market fluctuations, in certain sort of thematic fields, if you go in for, various mutual funds, specifically in the diversified sector, it will be definitely more beneficial to you. So to answer your query, do select more than one mutual fund.
Alright, well, Nisreen, thanks so much for that. Let's move on then, get you the second query for the day, and that's coming from our viewer Arjun from Delhi. His question is, he's given his current portfolio, so let's take a look at that first. Parag Parikh Flexi Cap, he has 6,000 rupees in that, 5,000 rupees invested in SBI Blue Chip, 3,500 in Axis Blue Chip, and 3,500 in Nippon India Small Cap as well. Now he's planning to add another SIP of 4 to 5,000 in the new fund for another 10 years. His query is, please review his portfolio and suggest a good fund for him to go ahead and invest his money in.
Sure. So this is very well selected already, what he's done. The funds are all, managing very well across the category and across the peer group. He's got about 40% in blue chip companies, which again is a very good strategy. Around 30% in Parag Parikh Flexi, which is a large and mid style, and small cap he's got about 3,500. So even the asset allocations in terms of percentages are perfectly fine. He is a little under allocated towards the mid cap section. So we would select the ICICI Pru mid cap fund. That would be a good recommendation, to have a little bit more in the mid cap, because he's already got small caps, he's got flexi caps, and he's got the at least 40% portfolio in the large cap. So Arjun, my suggestion is to include mid cap, and you can go in for ICICI Pru mid cap fund for the mid cap, under allocation in your entire portfolio.
Alright, let's get a move on then. Let's talk about the third query of the day, and that's coming in from Swati, who's from Bhopal. Now she has been investing 16,000 rupees in the HSBC mid-cap fund for over 6 years, but the returns are moderate. Now she wants to switch to a good mid-cap fund and continue her SIP. So she has two questions for you. Please suggest which mid-cap fund should she switch to, and also how can she track compounding returns in the new fund, since her entire new capital will be the entire corpus from the HSBC mid-cap fund. So what's your advice over here, Nisreen?
So if you like to switch, you can switch to the ICICI Prudential Midcap Fund, which I also mentioned in the query, which I answered to Arjun. And the returns is almost parity with HSBC, but you will just get because typically HSBC and ICICI both are in the same kind of return segment, which is for diversification. If you would like to make a choice, you can do that. Also your entire amount is in 16,000 rupees in HSBC mid cap. So you could, reduce that amount and do 8,000 in each. So you can get the benefit of 2 fund managers. That's a probably a good suggestion for you. And when you want to track it, then you can either track it individually through the each AMC website, or you can put it on something called moneycontrol.com, where you can add in different funds according to the folio number, and you'll be able to track it, on an independent site such as Money Control. You can try that one. Yeah. So HSBC is also not a bad fund. Generally, it has performed pretty much, on par. But just as an alternative, you can have 2 funds. Also, I don't know why you're only in the mid-cap space and there is no diversification. You typically should have diversification. You should have some amount in a flexi or a multi, some amount in a mid and small, and some amount in a shorter term category like equity savings or balanced advantage, which you will get, if you need the liquidity in the shorter term. Okay, so your portfolio is not diversified right now. You only have mid-cap funds. So please keep in mind that you need to do a little bit of asset allocation also.
All right, Nisreen. Well, thanks for that very detailed explanation coming in. I'm sure our viewer will appreciate that. Let's move on then. Throw the next query at you. It's coming from Piuli from Kolkata. Her question is that she's 23 years old and she would like to invest around 8 lakh rupees in a lump sum amount. So now her question is, should she go for mutual funds with a minimum to moderate risk? Can you suggest the mutual fund for that or any other investment option? She's looking to invest for a long term, let's say 5 to 6 years. Returns above 10% annually is what she's expecting. So what's your advice here?
So congratulations, Puri, on starting your investment journey at age 23. It's very heartening to hear the younger generation is also thinking of, investments and possibly their own retirements, or, even 5 to 6 years is a very healthy tenure to look at. So as a retail investor, I definitely would suggest that you put in your money into mutual funds. The benefits are plenty. I mean, you'll get diversification, you'll get a professional team to manage your money. You'll have risk management because of that. So you'll get rupee cost averaging. Of course, you are not putting in SIP, but you're putting it at a certain period of time. So you have all the benefits of a fantastic, a team of people who will be working for managing your money at a very, very minimal cost. So you should be looking at mutual funds. If you're thinking of investing about 8 lakh rupees, I would suggest about asset allocation for you, which was equal. So 25% in each, that is 2 lakh rupees in, say, a Franklin India Flexi Cap Fund, Invesco India Infrastructure Fund, Motilal Oswal Mid Cap Fund, and the Sundaram Small Cap Fund. So we are trying to give you the mid and the small and the infrastructure, which is slightly more, aggressive in nature because your age is young. You're looking at about 5 to 6 years. It's possible that even at the end of 6 years, you would like to continue your investment. And you may not need to dip into it because I believe that you are a working individual and you'd possibly continue your investment journey. So I would think that a slightly more aggressive stance for you would help you. We've selected a thematic fund for you, which is an infrastructure fund, which we believe, which will do very well in the next 5 to 6 years. And we've given you some amount of mid-cap and small-cap funds. So the Flexi Cap Fund is largely, large cap and some amount of mid-cap. So 25% into each of these categories will serve you well.
All right, Nisreen, thanks for taking us through that. The next query is actually a portfolio health check, so I'm going to take you through that. This question is coming in from our viewer Ajay, and he needs a portfolio review. He's 36 years old and he has been investing in SIPs for the last 6 months with an amount of 30,000 rupees. His fund allocation is as follows. Parag Parikh Flexi Cap, 7,500 rupees he's investing over there. 7,500 also going in for the HDFC Sensex plan. 4,500 rupees invested in the Nippon Small Cap and 3,000 invested in Tata Small Cap. Also 7,500 allocated to Kotak Emerging Equity Fund. Now he wants to increase his SIP by an additional 10,000 rupees. He's asking you to please suggest a fund. His goal is to retire by the age of 55. Monthly expenses as of now at 75,000 rupees, including a home loan EMI of rupees 43,000, which will end in 2027. He aims to accumulate a corpus of 3 crore. Is there anything else you would like to add or modify from his portfolio? How would you go ahead, Oya?
So, congratulations, Ajay. You've selected a pretty much comprehensive and a very well asset allocated portfolio. You've got the flexi cap, you've got a Sensex index fund, you've got small cap. In fact, you're putting in nearly 7,500 rupees into small caps. And your goal retirement is at age 55. So you have nearly 19 years that you are planning towards your retirement. And I must say that, it's a very good asset allocation. Also, your long-term planning is very commendable. You're possibly putting a larger amount of your savings away for your future planning, which is possibly also your retirement. So definitely congratulations for that. You've selected it also pretty well. You've selected a larger amount into your small caps and your mid caps. So I think that's, for a longer term strategy, 90 to 20 years, this is the correct asset allocation. So I don't want to recommend any changes in the current 5 funds that you're investing in. You'd like to invest another 10,000 rupees. For that, I would recommend a larger mid-cap fund, which is Bandhan Core Equity Fund. You can increase your SIP of 10,000 rupees into that fund, which is a Bandhan Core Equity. So we've planned, suppose we expect about 14% compounded annualized growth rate in the next 19 years. And after 27, you won't have your EMI also. So your 43,000 rupees also will be, possibly added onto an investment journey, which is what the smart thing to do would be. Currently, your monthly expenses are 75,000 rupees. So possibly from the EMI that you will save also, we expect you to add that into your long-term planning, retirement planning, or, basically a wealth creation plan. So based on the 14% expected annualized growth rate, your, lump sum will be about 4.5 crores. So you're expecting 3 crores, but I think if the market support you and you continue in a very systematic and disciplined way to continue with your SIPs, then hopefully you will get about 4.5 crores in your kitty, and that would be your retirement fund. Also your wealth creation plan, which you can use for any long-term requirement. So that's the, advice to you.
All right, Nisreen, thanks for those words coming in. With that, viewers, let's slip into a short break on this edition of The Money Show. We'll be right back. You stay tuned. Good to have you with us. You're watching The Money Show on ET Now. All right, Nisreen, very wise words coming over there. Thanks for that advice. I'm going to give you the next query that's coming in from Umesh, a viewer from Bangalore. It's a very interesting query, so listen to this one carefully. He has taken a loan of 20 lakh rupees and would like to invest it in a mutual fund for a period of 5 years. Considering a yearly 9% interest outflow, how much can he potentially earn? Additionally, which funds are suitable for parking this money for investment? Now, if he opts for an SWP to cover this EMI, will he still be able to generate returns over and above that? Very interesting query coming here, Nisreen. What's your advice over here?
So, you see, his home loan is about 20 lakhs. And along with principal and interest, he will be paying about 24 lakhs 91,000. So his EMI is about 41,500 rupees a month. Okay. Now, if you predict that the mutual fund will give you, say, 10% returns annually, okay, because it could be more or less, but an average return we would less like to forecast or expect, because, exactly in an equity mutual fund, it's very difficult for us to give an expected CAGR. But just for the purpose of calculation and to answer his query, we can look at about, say, a 10% return. In that case, if he was to invest 20 lakh rupees in a mutual fund, his total withdrawal would be about 25 lakh 20,000 rupees, and final amount would be about 5,408 rupees. So if you want to park that money, you would definitely get a return which is higher than 9%, because that is your query. Is it possible for me to earn an annual return more than 9%, which I'm paying for my interest outflow? So the funds which are possibly suitable for you, because you are looking at about 5 years, so we cannot look at a very higher, a portfolio which is aggressive. We would like to keep it slightly conservative, because you have only 5 years left to pay off the loans. So we would suggest to you ICICI Prudential Equity Savings Fund, which has about 10 to 12, 15% in equities, some amount in arbitrage, which is about 40%, and then the balance in bonds. So this in this kind of a fund, you can typically expect about 9 to 10% annually. Then I would also like to suggest for you HDFC Balanced Advantage Fund. Here, the equity component is a little higher. It's really 40 to 50%. The balance in arbitrage and then the balance in bonds. So this keeps, your equity component a little higher. Nippon India Large Cap and Bandhan Core Equity Fund. So these are the kind of funds that, you can sort of invest in order to, as a parking instrument. So the first couple of years, you would select equity saving fund. After that, you would select the HDFC Balance Advantage Fund. And post 3 to 4 years, you can go in for an investment in the Nippon India Large Cap Fund or the Bandhan Core Equity Fund.
All right, Nisreen, thanks so much for taking us through that. I'm going to shoot the next query at you. This is coming from our viewer Zakir, who's from Mumbai. Now, he's currently doing an SIP of 20,000 rupees across 3 funds he started recently. His funds are Parag Parikh Flexi Cap, HDFC Nifty 50 Index and HDFC Balanced Advantage Funds. He's asking if these funds are good enough. He aims to achieve 1.5 to 2 crore in the next 7 to 10 years time. If not, what other funds should he be looking at? How many funds does he need to have in his portfolio? And his end goal is kids' education and marriage. So how would you advise him over here?
Okay, so basically, you've invested into the HDFC Balance Advantage Fund, which is basically a shorter term requirement fund. So that is something that will yield you, HDFC in the Balance Advantage category also keeps a larger amount in equities, some amount in arbitrage and some amount in bonds. But if your goal is a little longer, basically you're looking at about 7 to 10 years time, then you need not have the HDFC Balance Advantage Fund. Parag Parikh Flexi Cap and the HDFC Nifty 50 Index, they are both very good funds. So you could make a choice over there between the HDFC Balance Fund, and you can substitute that by starting an ICICI Pru Opportunities Fund. Now, if you're looking at about, say, 13% annualized expected rate, compounded annualized growth rate, your term is about 10 years. So you will have about, say, 48 lakhs in your corpus. If you need 1.5 crore in about the same time, then you have to increase the SIP to, by 20,000 rupees, an additional amount. So that is, you will fall short of your goal if you have invested it, your current investment amount as SIP is 20,000. Your current investment is 40,000, so you need to increase it by 20, sorry. So you need additional 40,000, sorry. Your SIP should be 60,000 rupees. Your current SIP is 20,000 rupees. So you will need an additional SIP, to be put in. So that looks a little bit, whether it's possible or not, I don't know, because to add another 40,000 into your SIPs would sound a little daunting task. But I would advise you to start with, a 10% step up every year. You started with 20,000. On the second year, you should be 22,000 and so on and so forth. Try to increase your SIPs at least by a 10% step up every year and review your portfolio every 3 years. Currently, your future value at this rate is about 48 to 50 lakhs. But every 3-4 years, if you could do the review and add in more funds, maybe you will meet your goal of 1.5 to 2 crores. If you need to add in some mutual funds and some SIPs, I would recommend Parag Parikh Flexi Cap Fund, the Mahindra Manu Small Cap Fund, and you are already doing the HDFC Nifty 50. So, you can continue that as well. So, at Parag Parikh also you're doing, so Mahindra Manu Small Cap, you should just, substitute ICICI Pru India Opportunity, Mahindra Manu Small Cap, substitute and add on a few SIPs, okay? Because currently it does look that, you have overestimated your future value. You may not be able to get the corpus that you're looking at unless you increase or step up your SIPs. So try to do that.
All right, Nisreen, and well, we've made it to that part of the show. I'm going to throw the last query at you. This is coming in from our viewer Ekta. Now, she's new to mutual fund investments. She has just started investing in SIPs last month, and that's 5,000 rupees per month for a 5-year tenure. Her portfolio, she's invested 1,000 rupees each in Nippon India Growth Fund, ICICI Prudential Equity and Debt Fund, SBI Contra Fund, HDFC Alexi Fund, Flexi Fund, pardon me, and ICICI Prudential Small Cap. She's planning to add another 5,000 rupees SIP by June this year. She's asking if her portfolio is diversified enough, or does she need to add more funds to the current portfolio? How would you advise her over here?
So congratulations, Ekta. You have already created a very good portfolio. I'm sure you're watching this show regularly and you have, made a very informed decision. So all the funds are very good. In case you'd like to increase your SIPs, just increase it in these same 5 funds, 1,000 rupees extra. Since you want to add another 5,000, you can make it 2,000 in Nippon India Growth Fund and so on and so forth. Your iPro Equity and Debt Fund is basically a hybrid fund, which will have about 60 to 65%, in equities and the balance in bonds. That is a fund that you could possibly use for a shorter term requirement, because sometimes we can't predict over a number of years, what are the commitments that you might have coming up later. So you might need, if you need to withdraw something in the shorter term, which is about 3 years, then you can look at that one. SBI Contra Fund, HDFC Flexi, iPro Small Cap, and Nippon India Growth Fund you can use for your longer term requirements. So it's a very well created portfolio. You can continue in the same funds, the SIPs. Any additional amounts, please add proportionately to these funds itself. And you are also savings your EPF, PPF, and your PLI about 1.7 nearly per year. You've taken health insurance for yourself and your spouse. So that's very good that you've done that, because that is a requirement. Medical care we will need. It comes up suddenly, and it's good that you've taken that. You do have a loan EMI of about 3 lakh. So try to pay off that as fast as you can. But I think that also if your annual income is about 7 lakh rupees per annum and your expenses are about 2.5 lakh, so you might be able to invest more into mutual funds. Okay, so you can go up. Right now you're putting in 5, you're thinking of another only 5, so totally you'll be putting in 10,000 rupees. So try to bring that up to at least 20 to 30,000 rupees, so that you have a sizable corpus in future, something that you will be able to use. A quick judgment call on your current annual income and expenses is that you are under investing and under saving. So try to increase that, because that is something that you will need for the later years of your life. And what you're not spending today, you're going to be spending tomorrow. It's your money. You're just growing it, and you'll be spending it tomorrow if you invest it in a rightful, systematic and professional manner, which you already started that journey. So congratulations on that, Ekta. Do continue to invest and do increase your SIPs.
All right, viewers, that's the last query that we had on this edition of The Money Show. Nisreen, thanks so much for taking the time out and joining us today. Viewers, with that, it's curtains down on this edition of The Money Show. Thanks so much for watching.
If you like this video, then like, share and subscribe to ET Now.